Thursday, September 28th, market analysis, Dan Ehrlich, 9:54 a.m. California time. We always start with the stock market indexes, and lately I've been using the E-mini, the ES to start with, as opposed to the Spider, but Spider is still one of my favorite indexes. Now, this head and shoulder top formation, which is 3 months in size, nothing is going wrong with it so far. The minimum downside objective is 4,110. We've already gotten probably more than a third the way down with yesterday's lows, but the close is relatively stable yesterday, and we're in the fifth day of being oversold. So my commentary was, I'm expecting a bounce at any moment, and basically we're in it, past tense. It could stop at any point here. I don't expect much rally. I don't think it's going to last very long. This is a classic small little burp on the way down to, I expect, 4,110. And only in a couple of days, we're going to be in October, which I have brought up the topic many times now, every day, I believe, in the last several weeks. And I'll show you a chart of the October lows. Out of the last 30 years, it only happened 3 times that it was not in October for a significant market bottom and rally most of the time. So not to be ignored. A seasonal tendency, we call it. You could call it a cycle. It's obviously attached to the month of October. Here we go. This rally, not going to go very far. The key here is the neckline for the moment, and it goes down very slowly. So we can say for a day or two, it's 4,385. I do not want to see the market close above that line. I don't even want to see the market get above that line. If it gets real close, that would be a very good spot to consider going short. Just my personal opinion, and the way head and shoulders top formations typically act. Next chart. Let's get to the next chart. There we go. Spider broke out to the downside, same as the E-mini, approximately 4 or 5 days ago, got oversold, came down, and actually closed an old gap that I was talking about off and on since last June 1st. That's done. And now the market is popping back up again. And again, the rule here is you do not want to get above the neckline, and you do not want to close above it. Absolutely. That would kill the formation. One comment I have to make is there is that darn gap here. I think it's going to go down in the books as a breakaway gap to the downside, which I said on the day that it started to break out, September 21. Because sometimes these gaps are across the neckline instead of just a little bit above or below, but that's what we got this time. All right. No rally further up than 434 and 3/4. 434.25, right in there. And if it gets super close, potential new short sale. But it could stop rallying at any point. And today's rally high is the beginning of a little bit of resistance, of which there are several little spots up to that 434. So we have already begun to reach resistance levels and potential spots for it to turn back down again. I wouldn't be surprised to see a new low for the week, even tomorrow, Friday. It depends on where it closes today. Next chart. NASDAQ has not yet broken out of the head and shoulder top. The neckline on the NASDAQ is downward slanted. And as a result, it's taken longer and a bigger break to get to the neckline, but we're still above it, including yesterday's low, which was almost smack dab on the line. So we get a little bounce here in an oversold condition, testing the neckline, but no breakout. And that's not unusual, but I don't expect it to be very long and go very far. Again, any old time, this could roll right back down again, and all of a sudden you're finding yourself at the end of the week or next Monday below the neckline on the NASDAQ. The DIA has broken out several days ago, like the rest of them, has already come down into a historical support level, this little blue zone I've got in here. And that was yesterday's low, actually significantly below that support area, but bouncing into other reasons for it to turn back up. So a variety of support levels all the way down to the minimum downside objective here of 324.14. Again, all of these are going to bottom out, and my best guess is at the moment about October 16th to October 10th. I know that's pretty much in the middle of the month, but there's reasons to come up with those two numbers. So, and I don't even know if they're the day of the week, so trading day, but right in there. Let's see what happens next. I believe we're going to go to the Qs, and the breakout to the downside was a false one yesterday for a little bit of time, maybe an hour or two. And it popped back right above the neckline on the closing basis, which is slightly higher on the day, and then rallied all the way up to where we got to this morning, which is a high equal to or a little higher than the highest for the last previous 3 days, and coming close to closing a gap, which it could do. It never broke out on a closing basis below the neckline, so closing that gap and then turning down would fit the story in the other indexes pretty nicely and not do any damage to the head and shoulder top next chart. We got the Russell. Here's another gap story. The gap was almost started to get closed at today's high. It wouldn't take too much more strength, even today maybe, or tomorrow morning, to finish closing the gap and then turn down. But that's something to watch very closely. There's an old gap that was closed on the way down a couple of days ago, but it kept on going a little further, which is quite common. And now let's see if it closes this gap above the market. The neckline on this pattern was broken a little bit earlier than the other indexes, and its minimum downside objective on the Russell 2000 is 165, which is very dangerously close to the lows of last year from quite a while back. April, May, June, July, August, that kind of stuff, October 13th. So, and we're getting into the 1 minute charts. We're dropping off a little bit for a little while here, and this is the Russell and the 1 minute on the Qs, and I watch these for obviously trying to pin down significant details as the market moves. So let's go to that October low again, because this is very, very important for intermediate to longer term traders and or investor types. This opportunity, if I'm right, is going to be one of the biggest ones for many months to come. I believe the long-term bull market is not over. Okay, so right around here, which would be the October 16th, 17th, 16th date, and the 407, 406 price levels I've been mentioning for weeks now, is my downside objective on a spider. I hope it's smack in the middle, basically, of October. I'm looking for downside exhaustion and weakness, possibly a downside gap, oversold conditions, and of course, I would just unbelievably love to have another bullish ER buy signal like we did last year. On October 13th, we got a bullish engulfing green ER buy signal. It's my automated trading system ER signals that produces these red top lines like the one at the top of the market, July 27th, just a few months ago, and other signals in between, of course. Next, we're going to be looking at the futures. And we start out with the E-mini, no changes. Excuse me. I'm dropping into a little bit of a support area on the way down with a pattern. Next is NASDAQ. All I've got is the neckline drawn in here because I wanted you to use your imagination a little bit to create their shoulder highs. So, no breakout yet. Closing below yesterday's lows would generate a breakout, and I do expect that to happen very soon. I didn't even fill in the downside objective here, but it's certainly down in the ballpark of 13,000. Next chart, we've got the bonds. Very oversold, highly likely that today's low is significant as far as a minor short-term, intermediate, maybe term low. This oversold condition is quite substantial. And the last time we were here was, how about that? October of last year. Interesting. And it turned around for months. Nice correlation, frankly. There's a possibility today's low is doing about what it did last October 24th, 22. Next chart. 10-year notes. I've got to say the same thing. Oversold conditions are severe at the low of today. They were a little bit worse just before October of last year. And this does look, it has the appearances of having a climactic low today. I'm going to say that the comments about the bond bottom and the 10-year note bottom, I think, are worth remembering. Okay. Maybe a significant turn in interest rate futures developing. Crude oil looks like a little bit of a top, but it's not over. It's been overbought unbelievably for weeks. And I'm trying to peg a turning point. Yesterday's rally looked a little bit like exhaustion strength that we might have gotten a little bit further, a little bit more of this morning, but we're down significantly momentarily. And if you can get below yesterday's low, we'll have a red bearish engulfing like we did, of course, on June 14th of 22, that major long-term top, period. Next chart. Heating oil. I still think this looks like it's topping out. I wouldn't be surprised to see if today's highs was one of the last significant rally highs before it starts to make new lows again below 3.12. I'm expecting at least a downside move into this red support zone down to 3, maybe 290 next. Natural gas going sideways for quite a long time, very boring, waiting for a breakout or signals. Next, gold has dropped below major previous lows back in February of this year. That is a long-term bearish breakout. We are oversold at the moment for the last day or two. That's not unusual under the circumstances. We might see another 1 or 2 more days down significantly. This looks very bearish, intermediate to long term. The short-term situation is, oversold, and it could bounce a little bit, but how far up it goes and where it stops and how quickly and so on are going to help tell me the bear position I'm in now, opinion-wise, is going to survive. Yes, this looks pretty bearish. Next. It looks like silver is about to do the same thing. We haven't seen it really close that badly. Once it's gotten into the support area, it's bounced like it's trying to do right now. But I think the operative word is trying, and not doing the greatest job at the moment. Watch out. This could turn very bearish also. Would be no surprise. Platinum trying to hold at support. Bounced very nicely after yesterday's big down day. It may be able to come back up to the 947 or so, but here is another situation where if it turns around real quick here and starts to drop below yesterday's lows, below 880, that's going to turn pretty bearish on a long-term basis. I know there's a gap up there to close, and this is October platinum futures contract, not the continuation. This gap here is not to be ignored. There's still a chance that the support could hold if we can get above on a closing basis the highs of the last couple of days. It's very close, just a little bit further. Then you're probably going to pop all the way back up and close the gap, and we'll see what happens next. We've had some really good signals in precious metals this year, some really great ones across the board. You can see we got this low, we got a high, we got a low, we got a sell signal that worked for a few days, but during a topping out situation, that one did not work, and this one was the bottom. Next, and those are October futures contracts. High-grade copper, testing support again. I keep saying that for metals here. Some looking better than others. Copper's bouncing real good, but it was oversold in support, so no surprise. How it handles and how far, how long it takes, and what it does when it gets there, getting up to maybe 3.850. Could be turning down and breaking out to the downside real soon here. This looks like it's going to turn bearish intermediate to long term if you can close below today's lows. Next chart. Soybeans holding a big support area, getting all the way back down a few days ago to 1280, which I talked about way back. Oh gosh, and it happened actually twice when it was July 27th. First time down, support held very accurately. Bounced all the way back up, closed a gap, got overbought on an upside exhaustion gap short term, and turned right back down to where we are. It's oversold still in support, trying to do and doing a fairly decent job at the moment of bottoming out. But I'd love to see it close above yesterday's high, and then you're on your way back up a bit. Again, next chart is bean oil is on the fringe of a major bearish breakout. This is a double top where we have a sell signal on the second rally high. Great, August 21. Too bad it wasn't like silver where we had both highs turn red, a bearish ER sell signal. Support was tested, bounced off of it with a bullish signal that did not work 4 days or so, 5 days ago. It dropped again to new lows on a closing basis and then finally got a little oversold. So we rallied yesterday. And today, Thursday, we're coming down to test the lows of the oversold date just 2 days ago. It's going to have, it looks like, a new low closing price for quite a number of weeks and months. This is definitely turning bearish. The minimum downside objective is 49.70. Probably take 1-2 months to get there. And it should not close above the neckline. And I am starting to call this a head and shoulder top now because it's too many good looking things about this. Your first shoulder was over here on the left, and that was a rally high on July 5. The double top is the head of the formation and has two heads. And on the right side, you have the last shoulder of September 15th, but it was a bullish engulfing in a spot where I am very uncomfortable with these results, so I'm probably going to white that out. That one's okay. I have no problem with that one turning green. It just simply was a bad signal. Next chart. Meal. Sideways, no breakouts, descending tops for a greater period of time than the ascending bottoms, unless you go all the way back to a year ago, then you have the ascending bottoms. But I added this little teeny line right here. That could be, and I'm sorry to say, gosh, another neckline for those of you who don't like head and shoulders. I do. It happens to be my favorite technical analysis formation. I see them a lot, and I know what to look for when they're failing and when they don't. So far, this is just developing. It's going to take a little bit of time, a week or two, before it breaks that line. Probably. I don't expect it to crash super fast. But I am starting to talk a lot more about an intermediate to longer term bearish situation. Not doing anything at the moment. Next chart. Corn is going to go the same way as wheat. Now it's rallying short term. We're rallying up to resistance. I think it should stop at 492 and then turn right back down to make new lows for the trend. Period. Wheat's done that. It hit support back on August 18th, bounced a few days after being a little oversold, broke the support level, resistance above old support becomes new resistance in a bear trend, and makes new lows, and we're kind of close to it right now. Next, cattle. This is a weekly chart. Nobody looks at weekly charts anymore. I find it interesting in this particular occasion because guess what? I'm going to turn on something here I usually don't do. The early cycle forecaster is a cyclical analysis tool, and I've got, let's see the yellow lines, and there they are. A cycle I find very, very interesting. I'm going to go back to 2006, where the cycle low was a little double bottom and it happened, excuse me, a little early. The next, I forgot what the time frame is on this, but we'll talk about it again. Cycle low was right on time, on time, on time, on time, and again, sorry about the broken record, on time. A little early, but there was a great buying opportunity, and after that, it never went lower. On time spectacularly, and that was 2020. And then, yeah, you made some money, but it wasn't the real profoundly important cycle low or cycle price. And that's the only one I really don't like. And guess what? We're there right now, last week, this week. I can't believe this should be a cycle low. It probably happened a little early this time on that correction, and we are on our way up already. Hate to say that if you're love beef. Next chart. Oh, got to turn this off just a moment. And here we go. Huh. Yep. Okay. Now we got hogs between a rock and a hard spot, going sideways. Very sharp rally today, but it doesn't lead to anything. In fact, it's not even close to being overbought. So it's probably going to go up to the resistance area again, and we'll see how that what happens then. It may just top right back out again and come right back down again. Next chart. OJ. Blow off top I mentioned as a possibility yesterday. Now all of a sudden it looks much more realistic. We're not out of the overbought conditions relative to the highs of the day situation, but nosediving quite sharply, which is no surprise considering the blow off top situation. I'm expecting a move down at a minimum of 333, down to 333, which is not that much further, but there's a very good possibility of 311. Next chart. Cocoa. Got a little oversold yesterday. Doji inside trading range today. Doesn't mean too much. And coming out of a slight oversold condition, so maybe another day or two bounce. I think there's still a good chance you can test 3,313. Next chart is coffee. We are breaking by a very small amount the bottom of the support area. Profoundly important. If it closes much lower than the current quote at 147-ish, it's going to look like a downside breakout, and you're not oversold, which could very well lead to another couple of sharp down days. I think that the low that was made back in January of this year, around 135.5, could very well be right around the corner. Next, sugar. Bull trend, higher highs, intermediate, longer term. I can't help it. I'm sweet on sugar. I think it's going to make a new high. Next, cotton at resistance, stopping it again. But you have to consider, since last fall, November, you've had higher lows and higher lows and higher lows at a little bit faster rate, and you're at the highest high only a few weeks ago. So it looks like this is going to break out of that resistance area, which stopped it for a couple of months. And this is the beginning of another significant leg up. Next, the E-mini dropping off a little bit, but we're still quite strong on the day. I can't help myself. Let's go look at the 1-minute chart real fast. This is the DIA, new low for a couple of hours, but not that big a deal. And here's the E-mini December futures contract. Yeah, okay. That high today could have been it. I really can't tell yet, but I wouldn't be surprised. You guys have a great day.